According to a study released on Wednesday by Statistics Canada, the Canadian economy grew at an annualized rate of 3.1% in the first quarter of 2023. According to the most recent data, growth exceeded the government agency's own quarterly prediction of 2.5%. According to an early assessment, the GDP expanded by 0.2% in April after contracting in March. As the Bank of Canada is anticipated to publish its next interest rate next week, the economy's continued resiliency will probably prompt discussions of a prospective rate hike. Investors increased the likelihood of a rate hike at the central bank meeting next week as a result of the reasonably robust GDP performance. Prior to the release of the GDP figures, trade in swaps, a type of investment, implied a little over a 1 in 4 possibility of an increase. The increase in exports and consumer spending in the first quarter fueled growth. On the opposite side of the ledger, slower inventory builds, falling household and corporate investments in machinery and equipment, and slower inventory accumulation all weighed on GDP. After hardly growing in the second half of last year, consumer spending increased 1.5% for goods and 1.3% for services in the first quarter. Vehicles and clothing accounted for the majority of expenditures on items, while travel, food, and alcoholic beverage services accounted for the majority of expenditures on services. Despite the Bank of Canada's hopes that a sharper decline in consumer and business spending would result from high interest rates, the Canadian economy has continued to surpass predictions. The central bank stopped raising interest rates early this year, setting the benchmark rate at 4.5%, the highest level since 2007. Tiff Macklem, the governor of the central bank, has said that the institution is still determining whether current interest rates are high enough to stem inflation. The headline inflation rate increased little to 4.4% in April and remained much above than the central bank's goal rate of 2%. Unexpected economic growth will cast question on whether interest rates have been raised by the central bank far enough. After the announcement of the data, the loonie, which had fallen in early Wednesday trading, recovered some of its losses. The yield on 2-year Canada bonds increased as high as 4.232%.